Good evening, Trade Flare family. Welcome back to the nightly breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. Now, before we head over to conduct a technical analysis of the SPY and 5 stocks, let's look at some key points to get a broader view of where we stand. So to the first key point, I want to talk about the market and how it's kind of confused right now, or at least the way the bonds are moving is contrary to the fact that we just had the highest consumer inflation print since pre-2008. And as you can see here, in the month of July, the inflation rate was 5.4%, which was actually 10% higher than the consensus expectation at 4.9. Now, with a higher inflation rate that almost seems to be getting out of hand, you expect to see the rates to climb up, or the yields, the bond yields, to start to climb up to tame the inflation. And that's usually what we see with these treasury yields. A lot of people thought that yields were going to jump up today, but instead we saw the opposite. We saw yields to continue to the downside. You can see that here with TLT. This is the inverse of the yield. So as TLT goes up, yields go down. So as you can see, TLT shot up today and it's going back up to this level. That means yields are going down again. And this brings up the idea that there has to be something, that we don't know about, or that we really aren't thinking about, that's causing these rates to go lower. And this is when you start to see people rushing to find the reason. And looking all over the internet, they're starting to create theories right now. A lot that I'm seeing is they're bringing this idea again. We've been seeing this idea: global economic slowdown, deflation. What do you mean deflation? We just had the highest inflation print ever. Yes, deflation. And I can see this side, honestly. In Asia, some countries, they're already reordering lockdowns to tame the rapidly spreading Delta variant. Powell did also mention that vaccinations are a key part of this recovery, and a variant would be a risk for the health of the global economy. Seeing China cut the RRR last week may have been what set off this idea in investors' minds. This means that they are seeing growth slowing and they are needing monetary easing. And this is what makes me wonder if there is a negative earnings surprise from a mega cap company that could cause a market reaction. We did see Taiwan Semiconductors drop 5% today on earnings with negative outlook on the chip shortage. And seeing investors pour into bonds like this, brings this idea back. And honestly, I'm really looking at China as the indicator. There's a lot going on right now, but I'm looking at China as the indicator. And this all ties into the next key point, which is the shift to safety that we are seeing around the market. NASDAQ and the S&P are in the overbought zone on the daily and weekly charts. Big caps and tech companies have been strong, and they like low yields to an extent. We saw utilities and consumer staples start to get some real energy. And looking at these sectors compared to the others, they have really been the laggers this year. They have a lot of value stocks and some defensive stocks. And this looks like a move to safety by investors. And when we see these two sectors as strong as they are, we see the way the bonds have been acting. As far as these consumer staples go, they're really being led by the beverages. A lot of heat from the Pepsi earnings, which happen to be historical, and this is because of the inflation recovery, the rise in consumer demand, stimulus. So I'm looking forward to see these consumer staples earnings. As we know, these stocks usually tend to be pretty defensive, they hold to their value. Next, let's head over to our last key point, which is, as always, our indices and our sectors. So looking at our indices, we had the Dow closing up, leading up 0.15%. The SPY closed down negative 0.34%, and then we had the NASDAQ closing down 0.7%. So if there was any strength today, it was in the Dow, it was in those value names. We can see that if we look at the sectors that were up, we saw utilities, consumer staples, financials, and industrials all leading the way. On the downside, we had energy, tech, communications, and consumer discretionary. So we're noticing this rotation to value, these value sectors, so we'll keep an eye on that and expect to see more out of that. So now that we have a broader idea of where we stand, let's head over to do a technical analysis of the SPY ETF, which tracks the S&P 500 index. So looking at the SPY, and I'm going to be looking at the 1 hour chart here, just to get a little bit of a different angle. So notice here we've got some levels drawn. So the first thing I actually want to point out though is the trend lines that I've drawn. So we did break this rising wedge, which is a bearish reversal pattern. We gapped down through the support. We sold off all the way down to the top of the gap here at 432.50, where we found some support. So this support level seems pretty key here. We've got the top of a gap, which is also a 232 retracement level, not a key retracement level, but a notable retracement level. And as you can see here, it also forms a really nice support line with this parallel channel. Now, as far as this looks, seeing these lower wicks doesn't look bearish. And on the daily chart, this is a hammer candle with a long lower wick. Now, what we really want to start to look for is for this break of the 434.86 start to fill back into this gap. Now, if we do get strength into this gap, then we're going to look at 436.24 as a resistance. If we see energy like this, we could actually start to look at the 440 level as a target. But as the market really sits, you know, as the bonds are playing out, I would say that that's not as likely, but at the same time, we are looking at price action, and price action doesn't look that bad. So like I mentioned on Sunday night, I'm looking at that 440 level. It could be a key resistance if we get any sort of breakout to the upside. Now, going into tomorrow, I'm really looking at the top of that gap to hold. If we do start trading into the gap below, then we could probably fill to the bottom at 431 pretty quickly. If we do sell off through that bottom of the gap, I'm going to be looking at the 382 retracement level. If we retrace the last big move, we can see that retracement level at $429. And that's going to be a level I will be keeping in mind. Next, let's head over to the Qs and get an idea of what growth and tech are up to. So looking at the Qs here, looking at the 1 hour chart, and we're seeing some nice support off of this decently long-term trend line. We've seen support here for the past 3 or 4 weeks. And looking at that, you know, set of candles, that hammer candle right there at that support, it looks like this thing is gonna hold. So as it stands, it could be another bullish Friday for the Nasdaq. If we are bullish tomorrow, we should see resistance around 362.47. Obviously, a break above there, all-time highs would be in reach. On the downside, we're watching to see if that support trend line is going to hold. If that does break, that would be considered pretty bearish, and I'd expect a flush all the way down to at least 356 tomorrow. So a break of that 356.50, we're looking for a quick flush all the way down to 354.78. And this is where the bottom of the gap is, as well as the 382 retracement level. And that's one of those key retracement levels that we like to talk about. So with this being the bottom of a gap and a retracement level, and with a little bit of support found here in the past, we should expect to see some more support at that level. So really looking at 354.78 as the line in the sand as we head into Friday. So next, let's go over and look at our Dow Jones. So I use the Diamond ETF, the DIA. So out of all of the three, obviously the Dow looks the best today, up 0.15%, and we're looking to have recently broken out. As you can see, we had that flag break right here around 345. Now we're looking to really take out all-time highs, and I really think the Dow can perform in these financial conditions. Like I said, I think there's going to be some fear, some move to safety, and the safety is in the Dow. There's a lot of value stocks, a lot of big cap stocks that are not really going to take as much of a hit during an economic slowdown. We've been seeing some of these industrial companies, these financial companies, these utilities companies start to run, so keep your eye on the Dow. Looking to see if we can take out these all-time highs at 351. If we do, I think we're in for a good second half of the year. So now that we've looked at all three major indices, let's go over to our watch list, starting off with Next Era Energy. And if you guys have been watching these videos, you guys know that I've been waiting for this to happen, this candle with this much volume. I was looking for the fill of that gap today, so I'm really excited about Next Era right now. It's behaving the way I want to. As you can see, long green continuation candle breaking out of this huge range, breaking the resistance here of this huge triangle. So looking at where we could be headed, I'm looking at next stop $78, and then we got some poor structure all the way up to about $81. So we're making money right now on the September $80 calls. Those are up about 30% right now. We called those out in the Discord today, and we do have some time on those, so those could be good. So definitely keep your eye on Next Era Energy. Next up on the watch list is Keurig Dr. Pepper. Yes, Keurig owns Dr. Pepper, and yes, Coke owns a lot of Keurig. We mentioned this back here when we were looking to fill the gap but got rejected. Now we're actually grinding into this gap, so I wouldn't be surprised if this thing actually went and filled the gap overnight. We're seeing huge earnings hype over these beverage companies because of Pepsi's earnings were historical, so I do expect this gap to fill before the earnings. So I'm in some 36 calls, some in the monies right now. So I also own some KDP. It's a slow mover, it's a dividend payer, so definitely keep your eye on Keurig Dr. Pepper. Next up is Gilead Sciences, and looking at the daily here, and we've revisited this one, the same exact triangle, and we were looking for the break to the upside. We saw some sell-off back down to the support. Now we just saw a long wick, a long green body off of this support trend line. Volume is supporting this and earnings are right around the corner. So what we're really looking for is the break of this resistance trend line, and we'll probably see a little bit of resistance around $69.30 before we head all the way up to $70. And we will be checking back in on this thing, but if we do break out, it's gonna look like we could head all the way up to about $74. So make sure you keep your eye on Gilead Sciences. So next up on the watch list is Disney. So looking at the daily, obvious bullish continuation pattern, bull flag, and we're looking for the break and continuation. The resistance is around 185. And there is volume behind this. We're seeing the volume taper down for this bull flag until we see, another volume spike, and that's where we should see that continuation really start to kick in. So at this point, Disney really looking pretty decent, just really looking for that break of that resistance trend line. Next up on the watch list is Verizon, and looking at this one, clean falling wedge break. So seeing this break, I'm really looking to target, the bottom of that gap at 57.50. And I like that Verizon's, a value name. It's one of those names you might see investors start to rotate to. And seeing this strength while the rest of tech is down gives me the idea that they might. So keeping my eye on Verizon, targeting that 57.50 level. So definitely keep this one on your watch list. Last up on the watch list is McDonald's, and we saw what happened to Starbucks. And I keep making the point in our Discord that balance creates excess. And McDonald's being in this balance for a long time has created excess. And I like that long wick, even though we have that inverse hammer candle coming from a resistance level. I like that long wick on that hammer candle. That gives me an idea that we might stay and chop around at these levels for a second, or even break that resistance trend line. So buyers were there today. They were buying defensive stocks, they were buying bonds. So keep your eye on McDonald's. It tends to be a winner when there is this attitude in the marketplace. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, or if you learned something, make sure you hit the like button and don't forget to subscribe so you can get notified whenever we post any live or educational content. If you're looking to join our team and be surrounded and motivated by our online community of traders and investors, as well as gain access to trade signals that let you know whenever we make a trade, check out the link in the description below to join our Discord, gain full access by upgrading to TradeFlare Pro, get half off your first month using the discount code TFPRO 2021. But don't be mistaken, we are not financial advisors and none of this is a recommendation. The stock market is risky and you could lose money, so use the information inside these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.